All right, let's dive in. Today, we are pulling back the curtain on the secret history of your bank account. And trust me, it's a pretty dramatic story, one of total crisis and incredible reform that built the very system that protects your money right now. So let's get into it.
You've seen this sticker 1,000 times, right? That little gold and black seal on your bank's door that says FDIC-insured? It's everywhere. But if you ever stop to wonder what it actually means, what is it promising you? Well, the answer is a safety net that was born from absolute financial chaos. And to really get it, we've got to rewind the clock.
I want you to imagine a world where your bank could just disappear and take all of your money with it. Before the 1930s, this wasn't some nightmare scenario. It was a terrifying reality for people. Financial panics were actually pretty common. And if a bank failed, your life savings could be gone. Just like that. In an instant. There was no backstop, no guarantee, nothing.
So this incredibly unstable system, this financial house of cards, it finally came crashing down during one of the darkest times in American history. You see, the Great Depression didn't just cause massive unemployment. It set off a banking crisis that was absolutely catastrophic.
After the infamous stock market crash of 1929, panic just spread like wildfire. People, understandably, rushed to the banks to pull their cash out. The problem was the banks simply didn't have it. And this just set off a catastrophic domino effect. Get this, over 9,000 banks failed in the 1930s. Public trust was completely shattered, and the government knew it had to do something drastic.
And out of that crisis came one of the most important financial reforms in U.S. history. Congress finally acted to build a kind of firewall, something to prevent this kind of total collapse from ever happening again.
Now, its official name was the Banking Act of 1933, but pretty much everyone knows it by the names of its sponsors, Glass and Steagall. And the goal was actually simple, but incredibly profound: make banking safer for everyone. And the way they did it? It was truly revolutionary.
The act did two huge game-changing things. First, it built that firewall we were talking about. It legally separated everyday commercial banking, your checking and savings accounts, from the much riskier, high-stakes world of investment banking. This was critical. It stopped banks from basically gambling with your deposits. Second, and this is the big one, the part you still see today, it created the Federal Deposit Insurance Corporation, the FDIC. For the very first time, the federal government was putting its weight behind your money, guaranteeing it.
So how much was that guarantee worth? Well, when the FDIC first kicked off in 1934, it insured your deposits up to $2,500. Now, I know that might not sound like a whole lot today, but back then it was a massive step toward restoring people's confidence in the whole system. Fast forward to today, and wow, that initial coverage has grown, well, a lot, to keep up with the economy. Today, the FDIC insures your deposits for up to $250,000. That's per depositor, per bank. And it's a direct legacy of that original act from 1933.
But, creating a safety net isn't quite enough. The new system also needed a strong referee to enforce the new rules and keep everything stable. And that's where an institution that was already around was given a much bigger job.
So the Federal Reserve, you've probably heard it called the Fed, it had actually been around since 1913. But the Banking Act of 1933 gave it way more power. It was now in charge of supervising the banks to make sure they were operating safely and not taking wild risks.
I absolutely love this quote from the Fed itself because it just explains their role perfectly. They aren't the players. The banks are the players. The Fed's job is to be the referee on the field, making sure everybody follows the rules so the financial game is played fairly and safely without blowing up the whole system.
So what does this referee actually do? Well, its job really boils down to four key things. It manages the nation's money supply to keep prices stable. It supervises the banks, like we talked about. It works to contain risks to the whole financial system, and it acts as the central bank for other banks and for the U.S. government. Basically, its mission is to keep the entire economy on a stable footing.
Okay, so that's the history lesson. But what does any of this have to do with you today? Well, this whole foundation of safety and regulation that was built back in the 30s is exactly what created the banking choices you have right now.
When you walk down the street, you basically have two main choices: banks or credit unions. And the really fundamental difference between them comes down to their mission. Banks are for-profit companies. They're owned by shareholders, and their goal is to make money for those investors. Credit unions, though, they're different. They're nonprofit, and they're actually owned by their customers, who they call members, so any profit gets returned to the members.
And,
You know, this difference in how they're set up leads to some real practical trade-offs for you. Because credit unions aren't trying to squeeze out profits for investors, they usually offer lower fees and better interest rates on things like car loans and mortgages. Banks, on the other hand, because they're bigger, typically have larger ATM and branch networks and just offer a wider variety of financial products.
But here is the most important part, the thing that brings this whole story right back to where we started. No matter which one you choose, your money is protected. Bank deposits, as we know, are insured by the FDIC. And credit union deposits, they're insured by a different but similar federal agency called the NCUA for the exact same amount, $250,000. That safety net, born in 1933, now covers the entire system.
So why did we just go on this whole historical journey? Because honestly, understanding where this system came from is the absolute best way to understand how it works for you right here, right now. Let's just hit the highlights one more time. A truly devastating crisis showed everyone that the system was broken. So, in response, a landmark law created the FDIC to protect your deposits and gave the Fed the power to act as a watchdog. And it's that very foundation of safety and stability that allows for the choices between banks and credit unions that we all have today.
And that really brings us to our final thought. The financial system we all rely on every single day, it wasn't inevitable. It was forged in the fire of a crisis, and it's been changing ever since. So, as we look ahead at new technologies and new challenges, the real question becomes, what will force the next great change, and what will shape the future?